investment strategies. We have a lot of them out there. Everybody, goes through trying to figure out which one fits their portfolio, which one do they like, which one's the sexy one of the year that people advertise. Well, I'm going to go over 6 type of strategies that people typically use, but I really want you to try to understand these 6 so you can take advantage of the opportunities you're going to have when they're presented. The first one really isn't an investment strategy, but people tend to spend a lot of money on it. That's like the lottery, gambling, investing in the next fad as far as like Beanie Babies or trying to collectibles that really may not have any value, or trying to get luxury items thinking that they're going to appreciate over time, when in fact they're probably going to depreciate and you're going to end up losing money. Okay, those are more fads. Those are just shoot from the hip and hope we get lucky. That's not an investment strategy. Okay, so now I'm going to talk about 6 specific strategies, or actually go into the other 5. The next one is precious metals, crypto, things that are hedges against inflation, things that are opposite of cash, liquid cash. They're liquid in a different way, but in precious metals, commodities, you're going to have to sell them to pull your money out, but they're going to grow over time to ensure that you're building wealth. But you're going to have to sell it on a market. Crypto is the new thing that is, people are trying to figure it out. All right, not a lot of people know enough about it, but I can tell you it does have value. What we can see, people are moving in that direction, countries are moving in that direction. These are things that you probably want to start paying attention to, ask questions, but this is something it's new, but it is a type of investment that is going on, not just in the US, but worldwide. Okay, the next type of investment happens to be what everybody sort of is aware of. That's stocks, bonds, mutual funds, things that are, definitely you can build wealth. Heavily market driven. I mean, they can change one day to the next based on what somebody says, whether it be the chairman of the Federal Reserve, the president, a large corporation CEO, and then all of a sudden it goes up, then goes down, then goes up and goes down. Global geopolitical issues, global economics, those things are very volatile, but they are investments. You need to understand how they work before you start playing in that world, okay? Because you can lose money. The next strategy really is where people begin to build wealth. That happens to be in index funds. Understanding leveraging index funds that will generate significant returns, whether it be just in the market and that are dividend type stocks, or in different types of insurance products. That's the part people don't really understand. Those are index funds, okay? And they're going to grow and build with power. Then you also have real estate that is used not only for hedging against inflation, but also if you have 5 or 6 or plus types of rentals, you're having passive income, or you can borrow off 1 or 2 and pay yourself back and do different things, but you have multiple properties. So now you're really building wealth. And you can actually, if one goes vacant, you have money that you're collecting on the other 4 that's going to pay for that, and you're going to be okay. All right, those specific options right there that I mentioned are really where it begins and really start to build a lot of wealth, as well as stocks and those types of investments when you own a lot of it. But those are things that really we can start taking off as far as building wealth. The next 2, you really have to understand. One is equities. Really start getting into, or let's say, you're really starting to dive into, owning your own business, or you know, having large investments, getting into things that are going to grow. You're going to be able to own. You're going to be able to build wealth. You're going to get into the equity type of firms, you know, hedge funds. But you're going to need $250,000 minimum to dump money into those, because they're not going to mess around with 5,000 bucks. They're going to want substantial investors, people that actually can be an owner of a large corporate building in New York City, things like that. Okay. The last one is where everybody really tends, if you're fortunate enough to be involved, is to take advantage of being a business owner. But what does that really mean? Let's say, and we can look at the tech industry, and that's a perfect example. You have an idea. You create something. You create a service. You create a product. You create an efficiency in a specific industry. And therefore, you have people that are interested. You're a business owner, but now it's expanding, it's scalable. Okay? You've made it so where that business can function without you. So what does that mean? That means you've created something that can be sold. So you hear about how this huge equity firm or these companies are able to purchase a business for $1 billion, and that guy that developed it walks away a billionaire. Mark Cuban did it. There's a lot of people that have done that. In tech is a good example. So those are things that if you're fortunate enough to be able to do that or be involved with a startup, those are things that I would encourage you to at least take a chance. Why not bet on yourself? Because at least you can control your efforts. You can control what you are doing as a business owner. Okay? That is how people truly build wealth.